Let's talk about what's going on with the Fed and the things that they are buying, shall we? Today marks the start of the much anticipated move from the Fed. The central bank will start buying corporate debt ETFs. It's a key part of its emergency coronavirus lending program. Let's get to Steen Jakobsen, who joins us now from Saxo Bank. Steen, great to speak to you as ever. Your thoughts on what the Fed is buying? Some people have slightly flippantly said you just need a strategy now that buys what central banks are doing. I'm sure life is more complicated in your view.
Absolutely. I mean, one thing being that they're now entering into the junk bond market, and that cascading default effect that will come to this market is going to be interesting to follow 6-9 months down the road. But today is the start of the buy program, but it's not really the start of market having bought this already. If you look at HYG, which is a proxy for this, it's trading in the middle of the range from pre-COVID, and of course up from the middle of where it was at the low end of it. So market is already anticipating this. For me, it is clearly more about what the Federal Reserve is going to do on negative interest status of interest rather than this. But I'm going to be following this credit element from the cascading of the the investment credit into the junk bond move, and how much Fed is actually going to end up with, for ultimately, as they claim to be, the treasury in the U.S.
So what do you expect the Fed to really move the needle on then, Steen?
I think first up is the yield curve control. The amount of issuance that we see in the treasury market right now indicates that we have a yield steepening going on, which is the market repricing the amount of issuance that's coming from the treasury, and I think part of that ultimately could lead to a slightly negative view in the 10-year sector, which I think will force the Federal Reserve to a yield curve control inside the space of this year. So somewhere when we get into the autumn session of the Federal Reserve, that will move to yield curve control. And on the issue of negative interest rates, I see a lot of the Fed governors has been pushing back, but it's kind of irrelevant in my opinion. If the market pushes them to negative interest rate, the Fed will follow them, because Fed is not proactive, it's retrospective in terms of what it does. And I think if you look at the curve right now, we are trading negative interest rate somewhere between December of 2020 and March 2021. So it will be as it always is. It will be when the market takes Fed into negative interest rate that will dictate this move.